Introducing the Asian range. Now, what is the Asian range? Well, the price action prior to the Frankfurt Open or London opening can be very indicative of the future intraday price movement. Now, when we have a directional bias, you can use this Asian range to build or frame a context or storyline to the market's likely intentions. There is a stillness in price many times right before the intraday directional impulse price swing. You look at the chart here on the right. This is an Aussie dollar chart. You can see that there is a little shaded area right in here, and it's delineated with the gray shaded box, and I've labeled it, not surprisingly, the Asian range. So this little piece of price action, okay, I actually learned about this from Chris Lori, and I'll show you what I was doing before I learned this, so that way you can see I already had a beat on what price should be doing. But when I first saw him refer to it in his free teachings, he has a website, chrislori.com. It's changed and morphed a little bit over time, but folks that have gone through his material that know who I'm referring to, they would nod in agreement that they would know what I'm saying is true. He taught about the Asian range many times in free teachings. So it's not like I'm taking anything away from him. In fact, if you're not happy with what you see in my content, but you do want to take some advice from someone that has seen a lot of things out there, Chris Lori has a lot of good price action study, and his methods, while they are not mine, there's some similarities to what Chris does, but I'm going to show you what I took away from him. This is the only thing I really learned from Chris Lori, really. But that's not to diminish his importance as a teacher or what he knows. I'm just saying that this is what I gleaned from his material. I liked it because I was already familiar with using consolidations in certain periods of a trading 24-hour period. If you take certain ranges, you can do some really magical things with them. And I teach you that in the mentorship, and it goes well beyond what I've done in YouTube videos over the past couple of years. So what I liked about it was I seen a lot of context right away when I seen how the range is applied to the chart. So I will give you what I used to do and how I used entry techniques to do it, so that way you have a little bit of a takeaway, not only just talking about the range itself, but what we can do with it. And then I'll show you what I've done with it to incorporate it. Now, I'm not teaching you everything I know about this range and what I've done with it over the last 10 years or so. The implementation of it, I think, is useful for a developing trader, but there has to be some context behind it. The range itself doesn't produce anything magical, but if you have a storyline behind what price should be doing that particular day, it is unbelievably helpful. Okay, so let's define the Asian range. What is it that we can do in our charts to make it appear and draw our attention to it? Well, the range begins at 7 p.m. New York time, and it ends at midnight New York time. Now, as a special inclusion here, Chris Lori had his Asian range pushed beyond midnight. And if memory serves me correct, I believe he had 12:30 a.m. And to me, the financial markets really begin at midnight New York time. And it probably sounds pretty arrogant of a Yank like me, being in the States. But if you just study what I'm teaching you folks, you'll see right away what I'm telling you is the gospel, as it relates to intraday price action only. Now, everything else might be something different, but as far as intraday price action, I think I've cornered the market in intraday price action. So the height of the range is the highest high between 7 p.m. to midnight New York time to the lowest low between 7 p.m. and midnight New York time. The width of the range is obviously the duration of 7 p.m. to midnight New York time. So let's take a look at this chart here, and we'll get a little bit closer and zoom in on it. Okay, and we'll cover some points here. Now, right away, when you see this, it probably still doesn't give you any kind of insight, and that's fine. But I'm going to build on it and show you how useful it is. But we're going to build the model with specific buy and sell conditions later on in this video. But for now, take a look at what you see here, okay, and kind of like burn this in your mind. Your focus should every single day be zeroed in on 7 p.m. New York, and whatever that time is on your broker's platform, whatever your charting platform or package shows, find out what time it is at 7 p.m. New York time, and then find that same time on your charts. That's where you put a vertical line at, and that begins the Asian session. And then 5 hours later, it'll be midnight New York time. Put another vertical line in, and there's your Asian range defined by the duration. The highest high and the lowest low is what we would use to frame out the range. Now, there's a lot of voodoo that you can do with this range, okay? And again, I'm not teaching you here, but believe me, it can take you to the highest and the lowest pip of the day. There's some things you have to incorporate in that, and I teach that in the mentorship. But for now, I'm going to teach you a very simple approach to how to use this, and when you can filter out trades and not do anything that may end up taking a loss if you do otherwise. So let's take a closer look and remove all of the benefit of seeing the price action there. Okay, now we do have the benefit of hindsight, but nonetheless, I want to kind of build an understanding about what this range does, or at least my interpretation of it, and how I was able to see right away the importance of utilizing it in my view on price action. During this range, what's actually happening is there's orders that are coming in and they're stacking up above the market and below the market relative to that range. And it's also building up a market sentiment. Now, this compression of market participation starts to build up closer and closer and closer until we get to midnight in New York. As soon as we cross over midnight time in New York, we are in fertile ground for price movement. We're going to assume that everyone in this listening audience is familiar with channels, okay, or trading ranges. The idea is above this range, there's going to be buy orders. Those buy orders are going to act as breakout artists, okay? In other words, they are not astute to know how to buy when it's a low price or technically oversold without the use of indicators. So they just want to be buying on strength. And there's really nothing inherently wrong about that if you know what you're looking for. But most traders don't know what they're looking for, and they just go in a willy-nilly an entry based on breaking out above an old high. They'll buy that and view that as strength, and they'll put the stop loss rate below the low, which would be here. Short sellers would do the opposite. They would have their sell orders below this range. So any movement lower would hopefully put them in a short position, and they would take the other end of that range and put their protective buy stop. So buyers that want to break out above this consolidation are going to buy on a stop with a protective sell stop below the low. Short sellers want to sell on a stop and use a protective buy stop above the high. Okay, so the storyline is, what are we going to do after midnight, which is this vertical line here? What's the storyline? Where are we going to go? My whole entire career has been based on understanding this phenomenon. And it's been a more or less a pursuit of excellence. So I want to know with the highest probability, which side are they going to work on? Okay, and what I mean by that is, are they going to try to put a specific party of traders, whether it be bullish or bearish traders, in on the wrong side right before London creates what? The higher low of the day. So the key is, and this is the takeaway so far, and this is what should be written in your notes right now, is what you're looking for, what sets up the opportunity, if you will, for the particular trading day, is if we have a very narrow consolidated range between 7 p.m. and midnight, or what would be deemed as the Asian range. So if we have a very narrow consolidation there, that sets up a huge possibility of the algorithm going into a trending model. Okay, so in other words, without going into IPTA and teaching anything really about that, the market will seek the liquidity above or below this range with a premise that it's going to put them in the wrong side, and then it'll go the other way for the remainder of the trading day.